Hey guys, welcome to our First Time Homebuyers podcast presented by the Abbott Martin Group real estate team. We've got Shevlin Lockler with us today from SWBC Mortgage. She is our preferred lender for the 30 North project, and I'm going to kick this off to her. Shevlin, will you tell us a little bit about the 30 North townhomes?
Yeah, absolutely. We are sitting in the model home of 30 North, which is North Santa Rosa Beach's most luxurious new townhouse subdivision. We have 31 units still available, starting at $479.9, and we've got model hours Monday through Saturday from 10 to 5 and Sunday 1 to 5. So come check us out.
So the first thing that we want to talk about are the initial steps for a first-time home buyer. Cody, I'm going to kick this question to you. What do people need to know as they start their first-time home buyer process?
Yeah, so I would say the first step for sure is we have to get your budget in place. We have to understand what your finances are, okay? If we don't know what your price point is, then we don't know what we can look at, okay? So the easiest way to get that done is to get a pre-approval application done with a mortgage lender, and that's going to let us know, what price point we're able to look in. Once we've determined what that price point is, that's when we can start saying, okay, what neighborhood do you want to live in? What do you want in a home? What do you not want in a home? We can put all that together, and then as a realtor, I can take that information and find the best place for you, okay? But we have to start first and foremost with the budget. The pre-approval is the best way to do that, and then from there we can move forward and find anything else you want.
I think what a lot of people, they start looking, right, and they don't know what the finance piece is. And so that's why I want to kick this question to Shevlin. What preparation does somebody need to have as they step into purchasing their first home?
I'll start by saying if you're looking on Zillow, the estimates are normally wrong. So I wouldn't use that as a rule of thumb. I am a lender, but there are a lot of good lenders out there. Speak with someone that you trust. You don't have to necessarily do an application, but you can give me your budget. You can give me your income. We can go through your liabilities and see what you're going to qualify for. And to be honest, my favorite question to ask is, what do you think your monthly payment's going to be? A lot of times you have expectations that are a little bit lower than what reality is. So there are homes that are going to fit your budget. There's ways that talented agents can negotiate on your behalf to get you what you need. But basically going over what you're going to qualify for, looking at what discount points can do to your interest rate to lower your payment long-term, temporary buy downs. Newer construction homes tend to have lower insurance premiums. Things like tax and insurance do make a large portion of your payment. So understanding those things, we can do that before an application. And once you're serious, an application takes about 10 to 12 minutes. You can get pre-qualified in 30 minutes to an hour, and you can get with one of your agents and go start looking at houses.
Megan and Paige, I want to ask you guys, what roles do an agent play for a first-time home buyer throughout the process? Like, they're pre-qualified, right? They've met with Shevlin. They've kind of been forthcoming about their expectations. What are the next steps in the home buying process?
We can offer the guidance and letting them know about their monthly payment and what to expect, because we should, as real estate agents, be educated in that. But our role is to show you the homes that fit your budget, that fit the neighborhood you like, that represent you as a person, whether you want new construction, if you're into fixer-uppers. I mean, there's so many layers, and everybody is different. So it's about learning your client, knowing what they want and need in a home, and then hopefully, getting them in that home that they like, negotiating, closing costs, rate buy downs. I mean, all of that is just so important to make sure that we, do them justice in that aspect.
Yeah, for sure. To piggyback off of her, helping you find homes in your search criteria, negotiating offers, and also providing guidance in and through inspections. A lot of people forget about that step, those inspections. There's different inspections. We have WDO. We have some people would like to have mold inspections done. We have our 4-point inspections, navigating through those different inspections, and also providing local market insights and being able to support them in every way.
Yeah, just making them feel comfortable, I think, is the most important thing, because they don't know what they don't know. And so that is why having a buyer's agent that is seasoned and walking them through every step of the process is so important. Do you want to bring up a little bit more about this
I was
nugget?
just gonna say, first time buyers know nothing. I mean, I get DMs on the regular being like, hey, I think I want to buy a house, but like, what do I do? Like that is, I get them all the time, and they really need their hand held. First time home buyers are a whole different category from anybody that's ever bought in a home. I mean, it is, like you said, getting under contract is just the beginning, and then it's inspections, and then they're going to get that inspection report and they're going to be like, oh my God, everything's broken and it's like, no, as your agent, I'm here to guide you. These are just normal wear and tear. This is to be concerning. And also doing your due diligence before they even go under contract is important, because I'm going to check the age of the roof and the water heater and the HVAC and the wiring and plumbing. I'm going to do all of that before you even put in an offer. So we're not surprised when you do get that inspection report back and you just spent $500 on an inspection and now we can't even get the house because it needs to be rewired or something like that. Like, that's where your agent comes in to really hold your hand and guide you and be that person that is just you. I mean, they're pouring all their trust into you. It's like you're everything to them. They don't know anything at all. So I think that staying educated and caring about your clients and making them feel like you're my only person. Like,
we've got a great resource guide too, like under the Abbott Martin Group website, under the buyers tab, it shows very clearly each step through the home buying process. Now, are there pieces of minutia that exist in the process? Absolutely. But for somebody who's completely blind to the process, going to our website and just seeing what that entails from a framework essentially is a great starting resource, and then reaching out to us and working with one of our agents essentially. I think the biggest thing that I want to go to next is the financing part. People have no clue about financing or what's available to them currently or historically. So with our market being what it is, Shevlin, what are some of the financing pieces, the 101s that people really need to know about?
Yeah, so Hometown Heroes is obviously a really hot topic. It is a state-funded down payment assistance program for Florida residents only. You must work for a Florida-based company. I know that sounds kind of strict, but literally if you work for a company in Alabama, but you're remote in Florida, you do not qualify. So you must work for a Florida-based company and be considered full-time. You can't have owned a property within the last 3 years or been on title or deed. Their only exception to that is if you're an honorably discharged veteran. And there's some other exceptions for special situations with maybe a marriage that came to an end, but we can talk about that offline. But basically, it is giving you up to 5% of your down payment for your home on an FHA, VA, USDA, or conventional loan. So you can get up to $35,000. It's basically like the state of Florida saying, here's $35,000. Just pay us back when you sell, refi, or pay off your loan. I have had people that I've spoken with that are like, well, why would I take it? I'm a veteran. I'm 0% down. Why would I take a down payment? I don't know why you wouldn't. First of all, the interest rates are lower than any standard loan program. So if you did a regular FHA, VA, or conventional, your interest rate will be higher with required discount points. Today, the interest rate for down payment assistance on Hometown Hero for FHA, VA, and USDA is 6.5%, which is not bad. You cannot change your rate. So if you're a buyer specifically that wants a temporary buy down or has a lot of money to put towards discount points, Hometown Heroes and down payment assistance probably isn't for you. But I would say for 98% of people, it does make sense. And it's incredible. July 1st, $100 million was released. And as of today, we have $37 million left. So in 30 days, $63 million has been spent. So I would kind of encourage you, if you're on the fence about buying a house, maybe you think October, November is right for you, go under contract this month. I do believe by the end of August, maybe early September, the funds will be gone until next year. But there are other down payment assistance programs that we can look at. Hometown Heroes just has a higher income threshold. It's $134,850. So if one person on the loan is $134,850 or less per year, 640 credit score, Florida-based company. You should definitely talk to one of these agents here, and we'll get you in your home.
Yeah, we'll
It's a
get you
great
more
program.
information.
Yeah.
And how many other, like first-time home buyer down payment assistance programs do you have in your portfolio?
So we have 10 on top of Hometown Heroes. 9 of the 11 total are available right now. Some of them get replenished throughout the year. All of them are going to be a 640 credit score minimum, and then there's income limits, and normally that's going to be a household income limit regardless of who's on the loan.
Yeah, so if you don't make it in this next 30 days with Hometown
Yeah,
Heroes,
we can
there
still
are
help
other
you.
options that we can leverage to get you into a home.
Absolutely.
And it's hugely important, and I think the best person to reach out to today is your agent, and to start the process.
Right.
Yeah.
And some of those don't require you to pay them back, right? Like
There
Hometown
are-
Heroes does. But
Hometown Heroes does. There are 2 of the 11 that do have a sliding scale. So after 5 years, it can be forgivable. And then it's like a 20% increment. So after 10 years, some of them are forgivable, but most of them are non-forgivable.
Credit score plays a lot into what is available to you. And we've known each other for years, and Shevlin actually even helped me work through some roadblocks in my own financing because I understood how to leverage payments and to build my own credit score over the years.
Yeah.
And I talk about that a little bit, how you in particular, or lenders in general, can help somebody who's maybe initially interested, or maybe they go to an agent and they have an initial conversation, they come back and their initial credit score is not ideal.
Right.
And then what's great about working with the lender is saying, hey, let's look at the whole portfolio of what you have, your debt credit, limits, debt to income ratio, and then let's put a plan together
Right.
for 6 months and get that. Tell us a little bit about what you do in that regard.
Yeah, my favorite motto is my favorite motto is you're pre-qualified, but after that, it's not no, it's just not now. So there will be some people that have had really awful situations and their credit just tanked. From whatever the reasons are, a lot of lenders will be able to run a credit simulator for you. So once your credit is pulled, I can go to all 3 bureaus, TransUnion, Equifax, and Experian, and I can play with the numbers. If this borrower is like, hey, I have $8,000 saved. I was hoping to do down payment assistance, and I know my awesome realtor is going to get seller credits, so I'm going to come to closing with $0, but I have $8,000 to play with. Should I put it towards my down payment? And I'll be like, actually, your credit score is at a 560. But we've got this car payment, you've got 2 collections you didn't know about. Let me go play on this. Okay, if we paid off your collection, you got it deleted from your credit report, which is very important. If you have a collection, don't just answer the phone with the credit collector and say, oh yeah, I'll settle that $1,000 apartment lease bill for $200. It's gonna go to paid collection and it will not help your credit. You need to say, hey, let me speak to your manager. I will pay that $1,000 in full if you delete it from my credit report. It will actually go away, and I can forecast what that would look like. My brother-in-law's credit score jumped up 98 points because he had an $87 cable box that wasn't returned. He was able to get it deleted. So fun little easy facts that we can do to get your credit score up. Some things could be immediate. Some things could take 6 months to a year. But if you're not qualified immediately, I can say, hey, or if you're able to get a gift from family, instead of using that towards down payment, let's pay off these debts. Some people think, hey, I want to pay off my smallest ones first. I want to chip away. The best rule of thumb is to look at the lowest balance, highest payment. So if you've got $7,000 left on a car and your payment's $400, and you owe $5,000 on a credit card, but your payment's $500, you pay off your car. You pay off the credit card. Opposite. Lowest balance, highest payment, that's gonna have the biggest bang for your debt to income. And some of these things do not need to be done prior to talking to me. We can exclude things and manipulate things on our side, get your payoff statements, and all of those are paid at closing. When someone says you have to pay off a debt to qualify, the title company actually pays that for you. That doesn't mean go spend your money and paying this off, because what happens if you went and the inspection came back bad and you needed a new roof and that deal fell through where you had all of these concessions? Now you just spent all your money on paying off the debt, and now you can't qualify for a new house that you fall in love with because they weren't offering concessions. So always pay off at closing whenever your lender or anybody tells you to do something to improve your credit.
Yeah, I was going to say, do you guys have any experience in this situation with clients?
Yeah, I think one of the most important things that stands out to me just in the short amount of time that Shevlin's talked about this is not it's all the different ways that this can be accomplished for any person. Okay. So this path may not work perfectly for you, but let's play with the numbers. Let's move everything around and let's figure out what we can make work, because people love to hear the headlines of today. Houses are unaffordable. Interest rates are too high. Prices are higher than they've ever been. Rent's too high. Whatever it is, people see all of this fear that's going on in the media, and they immediately discount themselves and say, well, I can't buy a house. I can't afford a down payment. I can't do that. But we have down payment assistance. We have interest rate assistance. We have rate buy downs that people have already mentioned. Like, we have so many options to make it work for your scenario that you have to ask the question. You can't discount yourself right from the beginning. If you don't know a mortgage lender, ask an agent. An agent's going to know a mortgage lender that they're going to recommend that you could use. I mean, the question is how, not yes or no.
Yeah.
So don't discount yourself from the beginning. Make sure you ask first. And then even if it's not right now, it may not be a right now, but we can figure it out and get you there eventually.
Yeah.
I'm going to piggyback off a few things you said. One being, to anybody that wants to buy a home, yes, you're going to probably have to make some sacrifices, and that's okay. You probably can't eat out as much as you do, or it's about what's important to you. So even if you're like, well, I want to buy a home, and you think that means tomorrow, just like they were saying, no, that could be a year, that could be 2 years from now. We still have to sell houses in 2 years. We're going to be ready for you, and we're going to check in with you, and we're going to make sure that the lender that you speak with, who sets you up on a plan to get your credit right, your debt to income ratio right, we're going to guide you through that. We're always going to be checking in with you to make sure that you are on the right track. So with that, like when I bought my home, a little tidbit for you is I have both mine and my husband's car payment coming out of my bank account. That wasn't done because I pay them. It was just the way it got set up when we bought our cars, right? That played such a huge part when he was getting qualified for his debt to income ratio. And that was just like a little thing that we didn't even know. So just like, we can always offer you little tidbits like that to help yours. And again, just because you qualify for something, that doesn't mean you can afford it.
Yeah.
But that's also on the other side of that just because you qualify for something, that doesn't mean you can't afford more. So in our instance, we could afford more, and because the car payments were in my name, then we were able to do that. So that's one thing. And then I lost my train of thought, so go ahead. I gotta remember what I was gonna say.
Not to get discouraged, there are ways that we can put a plan in motion. Just because, like Shevlin said, it's not a no, it's just not today. There's those plans that come in. You have to prepare. You get a long-term plan, maybe a year, 2, maybe 3 years. And we're there still helping you and guiding you every step of the way. We don't lose that. We're not just here just to throw a house at you. We're here from the start to the finish, and even after that, we're here. We're friends throughout, and really, I mean, you almost become family almost in a sense, because you gain relationship with your clients. It's an amazing process to walk through this with people, and not only that, but the testimonies from it's amazing. But there's a lot of growth too.
But it may not be a not now. You know what I mean? Like you may
you'd
be
be
perfectly
surprised.
poised. You may think that you're not set up, but in reality, you can afford significantly more than you even think you can, because you just never bought one before. But it's about asking the questions, and it's about time in the market and not timing the market. So, if you're someone who's never purchased a home before, my first couple of homes that me and my wife purchased together they changed our financial future forever. There was nothing special about them. They were market price homes. That was the right home in the right neighborhood at the right time. And 3, 4, 5 years later, they've exploded. Okay. And that's going to continue to happen ideally across, the next 5, 10, 15, 20 years. Right. So making that decision and getting in while you can is something that could completely change your future. So just ask the right questions.
I think too, for first-time home buyers too, you have to remember this is your first investment, right? Your first home is an investment. It is not your forever home. It is not your permanent home.
Right.
It is a first bite into the market. And to position your family and your finances long-term, it's so important to just make that move.
Always.
And live in a
that.
smaller home. Live in something within your means, but start somewhere.
Right, absolutely.
It doesn't have to be perfect.
No.
Yeah.
No, my husband and I, we purchased our first home. We call it our little humble abode, but now we rent it out.
Yeah.
Yeah.
You know, and it's great. It's an investment.
Your first home could potentially be your first investment property.
Yeah.
So we still own and rent our first home in a completely different state and city, and
Yeah.
I don't ever plan to sell it. So there's options.
Yeah, pass down to your children. Like I said, you have to make sacrifices, but they're just small things. It's about what's important to you. So if home ownership is something that you want to accomplish, we're going to make it happen for you. And yeah, like I said earlier, you might have to not eat out as much, or, get rid of Hulu versus Netflix. Like, these are all sacrifices that you're going to have to make. But it's worth it when you walk into your own house and you don't have a landlord knocking on your door, or, if something breaks, yes, you have to fix it, but that's on your time. You don't have to wait for somebody from a rental management. Like, you might be paying a little less in rent, but compared to, what a mortgage would be, maybe $100 or $200. But it's almost right now, with all the programs we have and it being a buyer's market, which means, sellers are more willing to contribute closing costs and down, rate buy downs. It's almost cheaper to buy your home, because you could walk out of closing paying nothing. When you rent, you're paying first month, last month, you need a deposit, pet deposit. You might not even be able to have your animal there. Like, no, we're not doing that anymore. Like, you guys need to know that, like, home ownership is 100% possible. Just get in contact with a realtor. And I always tell anybody that reaches out to me, I say, I am so proud of you. Even if we don't buy a house for another year, I am so proud of you that you have decided that this is something that's important to you and you're going to work towards it. So, like, let's freaking do this. Freaking, okay?
Yeah, frickin's okay. Let's talk about misconceptions, though. So you guys hear the roadblocks where we've kind of talked about overcome the obstacles, but what are the misconceptions, the myths, the lies that first-time home buyers think? And I've been one, right?
Yeah,
We've all
me
been
too.
one. So what are they, Chev? What are the ones that you hear from the finance piece most often?
Jeez, I mean, in some cases, it is cheaper to buy a house than to rent. And as much as we all do this for a living, we all do have hearts. So, like, you'd actually be surprised how many people I talk to, and they're in a really good situation. They have incredibly low rent with great amenities and an awesome landlord. And the houses that they like, and they're like, oh, my realtor sent me this. I'm like, yeah, well, you're going to double what you're paying. Does that make sense for you?
Right.
Obviously, it's the buyer's decision, but they could be like, you know what, we're about to start trying to have a family. We don't have 2 bedrooms, or something happened to our dog. We can't have 2 stories. We need, like, there are situations where someone just has to move. But I guess a misconception is, like, that I'll finance to anyone and y'all will sell anyone a house. Like, at the end of the day, I don't want to put you in a home that you're going to, like, hate me every time you stroke that mortgage check.
It's true.
So, like when you
Yeah.
talked about affordability, there are several people that qualify for all, like, zeros added to what they thought that they could qualify for. And they're like, no, I want to stay in a $2,300 budget. I'm like,
Right.
God bless you. Like, that's amazing. And then on the other side, there's people that are like, oh yeah, I want a $500,000 house, but I want a $1,300 a month payment. I'm like, well, that's just not going to happen. But you want that? Let's go look at a $125,000 house.
Right.
We can get you there, but
You're going to see what a $125,000 house is, and
Right.
then maybe you're like, okay, maybe a $2,000 a month mortgage makes more sense to me from the quality of home.
Right.
But that's why when you go see homes, that's why it's so important. People change their minds so much during the home showing process.
Yeah.
Like, they'll think they like a older home. We go look at it and they're like, I think I want new construction. And I'm like, great. No, that's good. I
Yeah.
want you to see what you like. You want something updated, turnkey, move-in ready. Awesome. Now I'm only going to show you homes like that, but you're probably going to pay a little more, you know, but your insurance might be cheaper, and
Yeah.
you just have to educate them every day. I'm always on the phone.
I think so many first-time home buyers go in thinking too that they're Bob Vila home again, and they're not. This is not an HGTV makeover show,
Right.
and unless you and your spouse are handy people, or plumbers or electricians, or they have their GC license, like,
Yeah.
don't step into an older home, even though it seems more affordable. The cost to maintain that is going to be so much more, and I think people are looking price to price, and they don't see the value, especially when we talk about new construction.
Yeah.
We have sold new construction for several years,
Yeah.
and when you know the value of It's turnkey. It's under warranty, usually a 1 year, 3 year, and a 10-year structural. Those are huge things. You walk into an older home. Yes, the price felt more comfortable for you, but by investing a little bit more a month in your mortgage and working with a builder for maybe a rate buy down, your seller giving you a concession on new construction, whatever that is, it's actually better for your family. And I think people forget that sometimes.
And think about the power bill. I mean, my house is a 1914. I will be building my next house. I can guarantee you that, with insurance and just to keep the lights on in my house. It's literally insane. Not that charming old houses don't deserve love, but they are a lot of work. I love them, and I'm going to go broke fixing it. But
yeah, it's the charm and the
I think a misconception on the sales side is that people, like you said, well, they'll think you'll sell any house to anybody. But that is, I almost don't like to call myself a salesperson, and I would rather call myself an advisor, that I'm a real estate advisor, because you have to live in that home. Like, you have to show up every day and live in that property for however long you're going to be there, 5 to 7 years on average, right? And I will not put you in a house that I know you're going to hate. It's not going to happen. So however long it takes, whatever amount of time you need to find the best place, that's what we're going to do. If it takes a year, 2 years, whatever it is. But I'm not going to let you settle for a place that I know you don't like, because I'm not a salesperson, I'm an advisor. And you have to live there every day with your family, your kids. You have to grow up there, and I will not be the reason that you hate it, just like you said. So,
well, you also have to keep it real with your clients. And like I was saying earlier, is break down every single thing that's going to come up once you go under contract. And even if you're in a down payment assistance program and you get the seller to contribute $10,000 to your closing, and you get that net sheet, which I always recommend your lender, if you like a home, I'm going to text them and be like, can you please write up a net sheet for this house? Please, thank you so much. And then they'll send it over, and it breaks down every fee. It might not be 100% accurate, give or take. It could be less, it could be a little more, but it's really nice to see those numbers on paper, and you can be like, oh, okay, so they're paying all this, and I'm walking out paying $80 at the end. I'm like, yes, but you're going to have to put an EMD down, which is an earnest money deposit. It does go towards your closing costs, but that comes out immediately. And sometimes it has to be 1%. People are very particular about that. I'll always try, based on the price of the home, to go a little lower, but you're going to have to pay that. Then you're going to have to pay your inspection, and that could be, $300 to $500, give or take, which inspections you have to have. And then you'll have to pay your appraisal. And then, all these things are part of your closing except for the inspection, but people don't realize that they have to come out of pocket for that. And it can really mess up a deal, because they're like, well, I don't have that money. And there have been times where I've had to be like, okay, I'll do it for you, because I feel so bad, and that's another thing. It's like, I'm not here to just sell you a house and be like, good luck, peace out. Like, I care so much that it's almost a fault sometimes, because I will do whatever it takes to get you in a home, even at my own, sacrifice. So another thing is first-time home buyer programs. Sometimes you have to pay like a $75 class you have to take. A lot of people don't know that. And $75 to a first-time home buyer is a lot of money. That's in today's economy, half a week of groceries, you know what I mean? So they really need to be prepared for every possible fee, so that you're not, feeling like crap when they write you that they didn't have the money, like I overthink everything. So I'm like,
but no, letting them know is so important.
Yeah.
I think, once you talked about what's your budget and what you can afford, and then you meet with your lender, I think all the quote unquote hidden cost of the process and being very transparent as an agent is hugely important. Not just it serves, it serves the client at the best possible way, but it creates a deeper bond and relationship, because they know that you have their back. You've been so, forward thinking in, okay, what else could they be hit with? Again, like we said, they don't know what they don't know. So if you're transparent with them and say, this is what the scope of work's going to look like, this is how I'm protecting you from the process, or protecting you from being in a positioning that's not comfortable for you.
Yeah, because as a lender, we don't disclose what's not on the closing disclosure, which is your WINMIT, your 4-point. If you get a WDO that's not required, which VA loans are the only loans that we require a WDO. A survey, if the seller doesn't have a survey that hasn't been improved upon, that is the buyer's responsibility. I do actually go forward and tell people, hey, you've got $1,021 in your bank account left over after your cash to close. How are you going to pay for X, Y, and Z? And they're like, well, what are you talking about? I was like, did your realtor not tell you that you're going to be paying for these inspections? And you'd be surprised. There's a lot of people that actually are completely caught off guard. I try not to do other people's jobs, just like y'all try not to get too in the weeds on financing, but I'm a very transparent person. I overestimate every cost. I've even lost business because they're like, oh, you put my property taxes are $526. I'm like, oh, they're going to be $526. Your other lender just put $100 to make your numbers look better. And then at the end, I'm like, hey, text me that closing disclosure. Oh, it's so weird, $526. But like, but it's the same. Like, if you're transparent, and I will say, one time I spoke with Megan over the phone, and I was asking what she was doing. Her and her child were cleaning one of the listings that she had, because I don't know if y'all run into this way more than me, but so many days on closing, I've got my buyer's agents cleaning the house because the sellers and the listing agent did not do that.
Just happened.
Like, realtors do so much more than what you guys just even listed. I mean, sitting at a house to make sure the AC is actually blowing on the day of closing, or the solar panels the insides were removed, so that, like, there's just so much that you guys do that is unrecognized, and you have a very, very important job, and those that do it well.
I do think it goes unnoticed, like,
It
especially
does.
with the new NARS.
NAR.
NAR lawsuit.
Okay.
NARS is a makeup.
I know. That's why I said, wait, what's happening? With the new lawsuit, it's like, oh, buyer's agents aren't important. And then it's just like, stab to the heart, because it's like, we
So
are
important.
important and we do so much. Like, you have to also understand that a seller's agent is going to always have their sellers back for, the most part, because that's their client first. So even if they double side that and represent you as well, they're always going to look out for their seller, a little more than they would you. And you need somebody that's holding your hand and backing you up. And, oh, your inspection amount, is only up to like $1,000 in repairs. Like, you guys need to understand that if something comes back that costs more than that, that's on you.
Yeah.
And sometimes it's going to come back and it has to be fixed before you close. So that's another expense that you're going to have to worry about, because it could also get flagged on your appraisal. And then you're going to have to pay for the appraiser to come back out. You're going to have to pay for your WDO to come back out. These are all little numbers that add up very quickly that I always break down the possibilities for with my clients, because I don't want them to ever be surprised or caught off guard. There's nothing worse than that, when they're like freaking out, And to also know that the mortgage part of it, like when you're under contract, is stressful. Just know you're going to be stressed out. Your lender is going to be calling you and emailing you all the time, asking you for things, and you're going to be rolling your eyes, and you're going to be overwhelmed, and you're going to be stressed, but it is so worth it when you get to that closing table. Just know that it passes.
But we joke about all these things that go wrong, or all these things that you don't think about. But on the buyer's side, you're not going to see that.
Yeah.
You're not going to see the drama that's happening between agents. You're not going to see the report that came back poorly or whatever. You're like, the things that you have to see, you're going to see, but we're going to shield you from all of the extra BS that you don't need to worry about. Like, that's our job, is to make sure that you can, go to your job, do your day, hang out with your family, and we handle all the stuff on the back end to where you don't have to worry about it. So it is a roller coaster, and prepare for some things that you may not have thought about, but we're going to take care of it for you. And that's the importance of having the representation that's going to make sure that you're
you
good.
worry about the loan part.
Yeah.
That's the important part. You can be stressed out about that, but let us handle everything else. Like,
So don't go and buy a car after you've been pre-approved.
no, don't do that.
I can fix it. You
That's
can.
never happened to me before, because I will say it at the beginning. I'm like, do not do
Don't buy anything. Don't eat for 3 months.
Let your parents pay for it or something. My gosh.
There's been
Listen.
some people, like, if I had a barber who was 1099, and we were this close. I mean, I'm talking like, if he sneezed, he wasn't going to qualify. And he was like, I've got a 2-week vacation for Thanksgiving. And I said, look, I love family. I'm not going to be the one to tell you, but you're either going to spend time with your family or you're going to get this house. And it came down to if his hours were 0, because we're averaging, like, people think the first day we talk to you, oh, you're pre-qualified. That could happen, but 30 days later, maybe they bought a car, lost their job, had another child, got divorced, got married, filed their tax returns. Oh my gosh, when I'm pre-qualifying people in February, I'm like, okay, just so you know, when you file your tax returns, all of these numbers are going to change if you're self-employed. Self-employed people, please call me before you do anything in a year in advance,
No,
just so we can
your
help
best
you.
friend. Literally call or text. That's why if
This
somebody
is the-
doesn't agree with a lender, they're like, oh, they're not really communicating. I'm like, get another one.
Yeah.
Because this lender should be your right-hand man, your best friend. Like, should not be annoyed with you. Should not be, bothered that you're writing or calling them. Ask every question you need. And if that person is not serving you, move on to another. Because there is somebody out there that will.
This is officially a PSA for all of our 1099 people.
Yeah.
Please call Shevlin before you file your taxes for the next year.
Oh, wait, I just had a deal that we worked on for 3 months that everything got put on hold because of taxes.
Yeah.
It was a lender who required taxes to be filed. And it was one of those things where they had to put everything on hold. And it was a 3-month process.
They couldn't use an extension proof that the taxes.
They had already filed the extension, but
Okay.
it required for them to have it posted and filed. The payment posted with the IRS
Oh,
and
yes.
filed.
So, well, once you pay your taxes, you do have to either be on a payment plan with the first payment plan paid, accepted and approved by the IRS, or your taxes paid in full.
Yeah.
People, yeah.
But there's some places, some mortgages where they'll only require like bank statements.
Oh, yeah,
for
they're bank
approval.
statement loans.
Right. So that's where things got a little hairy, but we got it.
Yeah.
We got it all done. And here's another thing too. We all work hand in hand. As your realtor, we're not just your realtor.
Right.
We are speaking with your mortgage lender. We're speaking with the inspectors. We're speaking on anyone.
Title companies.
Title companies. My goodness, the title
Surveyor.
companies. Surveyor.
Handyman.
Insurance.
Things that need to be fixed, the insurance. We are there to assist and guide in every which direction that there is to go in. It's not just finding a home.
Yeah.
It's everything and all the above. And I think that's important because a lot of buyers don't realize that we do speak to the lender and that we can speak to the lender and kind of help in that way and guide them in that direction. There's some things that they don't understand all the time, and we are able to be there as help, not as a lender, but as to help fill in the gaps there for them too.
Yeah, and to say something you said earlier about how they don't see the behind the scenes things. Also, as a realtor, the way you speak to your clients about what's going on can really affect them greatly. So if you're coming in stressed out and you're like, well, this happened and then this, and then you're like freaking them out, just like try not to do that. Like, just try to handle it and come in like, I got you, it's gonna be fine, but expect this and this. Like, really, the way we speak and guide our clients like can change their entire experience, especially if it's something that is like easily fixed, but you just freaked them out and then you're like, oh, okay, never mind, it's all good. Like, don't do that to people.
Think about going to your doctor and you're like going in for a checkup, and if they behaved that way, I'd be like, I'm gonna need to be opened up.
Yeah, like,
And it's not true.
you
No,
could be
it's
done in
serious.
1 month, and then they probably be like, just kidding, it's all good.
No,
Right.
I had an inspector that said that flagged the walls not being painted correctly. The caulking.
Okay.
Let's see.
Never heard of that
That
one.
wasn't me neither. Different things like that. And they were like, oh my gosh, the walls are not done right. I'm like, no.
That's nothing. I will
That
paint
was
for you.
literally
Let's
the
patch
picture
Right.
that was hung there, and
Yeah.
they put some putty there, and they tried to just like paint it up and just try to do like a little fix-it job. I said, that's not going to make or break your home.
No, not at all.
And that's why it's important though to be that like calming factor for them, because they will freak out about a hole in the wall from a picture. Like when we go for our final walkthrough, they'll be like, oh, they left all these holes. It's like, okay, it's all good, guys. I will get some putty. I will come over and I will patch it up for you, and it'll be as good as new. Like,
I will
don't
paint it.
stress. You're a homeowner now. Like,
Right.
you really got to like be that person for them, especially if they're from out of town. Sorry, I can ramble all day. But if they're like moving from like military relocation or something, they're fully trusting for you to find them a home that is going to work for them without them even seeing it. Those ones are very stressful, and you really have to like get to know your clients and like figure out who they are as people, because that's happening for me right now.
I think
I'm so nervous.
all first-time home buyers, because everybody comes from different walks of life, there really is a loan program for so many. I was discussing like the DO program the other day, or the DO loans, and it's like people that are graduating from medical profession can essentially get 90. It's either 97, and some of them it's either 99 or 100% loan to value. So there are different loan programs that for
Everyone.
different employment structures, essentially. And I think that's really important to know that there's an opportunity for everyone to purchase. A lot of it has to do with your debt to income, right? And your credit score.
Yeah.
And those are two variables that can be fixed over a period of time or adjusted, but working with a knowledgeable professional who can kind of lay out the playing field for you and help you
Right.
better understand what you can do for your next steps. Which brings me to this final round of questions, which is tips and tricks. What are the tips and tricks that each of you would give for a first-time home buyer? I'm going to start with Chev, because we always got to start with the lender first, because if the lender's not happy, nobody's happy. But what is just a nugget of information that I'm a first-time home buyer? What's the most important thing that you always speak to?
So, gosh, there's so many things. That's why I feel like I should go last.
Well, we'll let you go last then.
That way they can.
Also, somebody should just schedule an appointment.
Right.
Schedule
Her
a call
number
with
will be on the
Chev.
screen at
We'll
the end.
put her number on the screen. Who wants to go first, Cody?
Is this navigating the market?
Yeah, let's talk about navigating the market, but the first, yes. So navigating the market as a first-time home buyer, and what are the tips and tricks? So I'm kind of like jumping two ideas into the same thing as we wrap up.
Yeah, I'm going to say that, we've already discussed that how much the market can change. So depending on when you're watching this, who knows whether it's up or whether it's down. So the first thing you have to do is stay informed on what's going on in the market, what type of market it is. So buyer's market or seller's market. You're going to see it all over the news. So it's hard to mistake. Like, you're going to know what the market is. And you need to be prepared to act fast. So know what's going on, be prepared to act fast. It can be super intimidating for a first-time home buyer to have a realtor look at you and say, hey, you need to offer full price for this house, or you need to offer over full price for this house, depending on what's going on in the market. But you have to be prepared for those things, because depending on what kind of market it is, that may be the reality. So knowing what's going on, is it a buyer's market? Is it a seller's market? Trusting in what your agent tells you. If I tell you that you need to offer full price for this, it's for a reason. It's because it's a super competitive market. It's a super competitive house, or whatever's going on. Just trust in what I'm saying. I have your best interest in mind. I have a fiduciary responsibility to you. I want you to get what you need. But listen to what I'm saying. I promise. Like, I've seen several first-time home buyers who have to go through 2 or 3 different offer scenarios for homes that they want to purchase, but they can't, because it takes that time for them to not win the offers and then realize, oh man, this is a lot more competitive than I realize it is. And just trust your agent. Listen to what they're saying. Know what's going on. Be prepared to act fast, and you'll have no problems at all.
Awesome.
Yeah.
That's great advice.
So 2 things off of what he said, which is trust your agent, because maybe you need more cash to close at the end opposed to the purchase price. $500 to $5,000 to $10,000 is what, maybe like a $50 to $150 difference in your monthly payment, but that $5,000 to $10,000 at closing could be huge for you because you don't have that cash on hand. So playing around with different situations and connecting with the lender to have those broken down for you is so crucial, because you'll actually see like, oh, okay, well, I can afford that a month, and then I need that $10K. So again, listen to your realtor, because we are going to always do what's best for you. But a nice little nugget, I always have my first-time home buyers make a list for me. I want your top 5. What you think, what you see on HGTV and TikTok and Pinterest, bring it all to me. Do you want a big master bathroom? Do you want it to be turnkey, move-in ready? Do you want a fixer-upper? Because we wanted to renovate our home. I want to create my space, but you may not want to do that, and that's perfectly fine. But I want a 1 through 5 list. And then by the time we get done looking at homes, that list is probably going to change a lot for you when you actually see the houses. But it's so nice for me to see what's important to you, because that helps me pick the homes that we see, and we're not wasting our time,
For sure. I always say ask questions. Ask questions. Don't be afraid to ask questions. Why do we need to put in an offer that's a little above? Why do we need to put in an offer? Don't we need to negotiate? No, ask questions, and that way I can give you the answers to why I think that we need to do that and take those steps.
Honestly, for me, and I learned this from Chev, is like, if you have cash buy your rate down.
Right.
Like,
Well, in today's time, for sure.
oh my gosh, just buy your rate down. If you borrow some money from mom and dad, like buy your rate down.
But
Borrow,
also keep
get a
in
gift.
mind.
Thank you,
Yeah,
get a
get
gift.
Don't
Get a gift.
borrow anything.
Get a
Get a
gift.
gift.
Keep in mind though, because if you plan to refinance at some point, that needs to be a conversation as well. Because at the end of the day, if you buy a rate buy down with your own money, but then you plan to refinance in 2 years, you kind of just like wasted your money.
You'll do a
So you
break-even
really need to
analysis.
do a break even analysis and figure out what exactly makes the most sense for you. If the seller's paying for that, they're giving you those cash at the end.
Yes.
Let them buy your rate down all day long. I have a deal like that going on right now, and it's like another lender was like, well, no, like we'll just have them, they're going to be wasting their money, it's going to take them forever to pay that back. I'm like, the seller's paying it.
Yeah.
The seller is paying 6% concessions. Like, let them do that. If they want to buy their rate buy down, then what makes sense for you right now?
Yeah.
Because the market changes all the time.
Yeah, we
Yeah.
talk, Shevlin, when we, previous projects, we talk about the power of a rate buy down. So if somebody, especially with seller concessions, you don't want to drop the price, you want to offer a buy down for the value.
Right.
Why? Because it affects the payment, especially for the first time home buyer,
Yeah.
even for investors, right? You bring the payment down, their ROI is even better,
Yeah.
month over month.
You're
And
still going to
so-
get that equity, as long as
Yes.
the comps pull correctly and the house is priced accordingly. Offering full price doesn't mean you're losing or you're cowering. It's all, I don't want to call it a game because it's not a game, but it is. It's a numbers game, and it's what makes sense for you every month, your payment and your cash.
Yeah. Not
That's-
only that,
that's it.
but also long term. Whenever you go to refi, what's the fees? What are we going to have to do? What are those steps? Being educated on that end of it too, because 3 years will fly by.
Oh yeah.
We'll just have a plan for the
Right.
future. Yeah, I mean, have a 3 year, 5 year, 2, whatever. Especially today when everybody's freaking out about interest rates, like that's fine. If you want to do a buy down, that's cool. Like it's still the same interest rate when you start. I don't think people understand what a buy down is. It's still the same interest rate. If it's 6.5%, it stays 6.5%. But if you get $10,000 towards that, it goes into a pot. $10,000 of that over 2 years pays down your payment towards X amount per month until that money runs out. You're back to a 6.5%. But over 2 years of you getting more like a 5.75 versus a 6.5 on your payment wise, in 2 years it might actually be at 5.75 or 5.5 or 5 or whatever. We don't know, but
All
that's a
that's
way
so
to bridge the
confusing.
gap.
People
Yeah,
don't
Yeah.
understand all of that.
And I can make it super fun. Like I'm a visual person. You tell me what you're buying the house for, or like there's agents that are like, you have written the most detailed pre-qualification letter. I'm like, because this will have your buyer coming to closing with $0.
Right.
Like, this will have your buyer coming to closing with $1,001 per the down payment assistance guideline. Or this will have your buyer getting a $2,000 principal reduction, getting their EMD, their appraisal refunded, like $9,500 in seller concessions towards discount points, closing costs, and prepaids. I mean, on a VA, the seller can pay off debts that a buyer is using. So like, let's say a VA buyer is buying a $200,000 house, it's got $10,000 in concessions. That buyer can pay off $10,000 worth of debt to qualify for a house. It's only on VA. But a common misconception, I wasn't gonna say this, but now that I'm thinking, is you don't have to be in your 20s to be a first-time home buyer.
No.
You also could be a lot older and have lived in the same home for 30 years, and now you're coming to retire in Florida. I'm working with people now that have owned their home for 39 years, and she's like, I can't believe all the documents you need. I mean, I love
It was just a
Can you
handshake
imagine
and a
when you
piece
used
of
to have to
dirt.
sign everything though? Now at least it's electronic. Gosh.
So I mean, things have changed, and again, if you owned a home in the past, but you have not owned a home in 3 years, you are considered a first-time home buyer. So it's nothing about age. Don't let that first-time home buyer word
Deter
scare
you.
you.
And just because you're a first time home buyer doesn't mean it's an FHA loan.
No, you can
Yeah, it could be conventional. It could be
Yeah.
any type of loan. You're just not experienced, and that's okay.
Well, or you are, and you've had a home, but
Exactly
you
like that.
You are now in the status of first-time home buyer after 3 years.
Yeah. So I'll just, I guess the one thing I was probably thinking the most of, which I don't know, maybe it's not relevant to you, but I hear it all the time. Someone will say, hey, well, I don't know how to make more money to help my debt to income. I'm just going to go get a second job. That sounds great, but we can't count second job income unless you have a 2-year history. Or, oh, I'm just going to start working overtime. Or I'm going to go pick up special projects. Or I'm going to go work for my dad. Great, none of that's actually going to count. Not that I'm trying to discourage you, but increasing your income, anything short of going from like 32 hours to 40 hours isn't going to be reflected for 2 years. Going to go start a TikTok business or an Etsy page. I love that for you. We can use some of those assets, but we cannot increase your income. So really getting your debts down is going to be the easiest way. Paying discount points to lower your interest rate, which is therefore lowering your debts. Those are some of the easier things. Don't just go get a side job or a second job or start Uber driving, because none of that's actually an account.
Right.
Yeah.
Thanks. No, that's super helpful. All right, so I'm gonna wrap up this conversation, and I appreciate all of you guys for being here with us today, and for Sophia and Cody and Noah for putting up with this afternoon.